Welcome, ladies and gentlemen, Precious Metal Fair Edelmetallmesse here in Munich, and with me here now is not a mine, not a precious metal company. It is Munchies, and it's EnWave, and of course a lot of you know the company. And this is Brent Charlton, the CEO of the company, whom we've interviewed a lot of times in the last years, and he wants to give us an update on the company and how is it going. Brent, great to have you here. Thank you for taking the time.
Thanks for having me, Jochen. Excited to talk about what's been going on with EnWave.
Absolutely, and I mean, I already see this here. Oh my Gouda and cheddar, believe it. I mean, that's fantastic branding, and cheddar bacon me crazy. That's a favorite, you know. I'm totally addicted to Munchies. I love it. I was one of the first guys even probably who tried it, because we know each other 10 years now.
We do.
And I think it's an exceptional success story, what you have created. And maybe you can give us a bit more of an insight, what happened this year, what does, let's say, the sales look like, the growth rates, all of that, please.
Absolutely. As you know, Munchies has been a significant contributor to our financial performance over the past few years.
Yeah.
Most importantly, in the past 12 months, we hired a standalone CEO to run the business.
Wow, that's how large it is now.
Yes, we recruited successfully someone who brings 30 years of consumer packaged good experience in Mike Pitlinski. And since his hiring, he's expanded a broad-based team of sales and marketing professionals, has rebranded the Munchies, as you can see, new packaging, which looks beautiful. And also, he's put together a succinct plan for growth. So this past year, through only 3 quarters reported so far, NutraDried alone did 18 million of our 26.6 million top line revenue.
Wow.
It's a profitable business. It has healthy EBITDA margin, and we believe has huge runway for growth over the next 2 to 3 years. So moving forward, where do we go? Well, Mike and his team have put together a very detailed channel strategy to grow this business, hopefully to the range of, call it 40 to 50 million over the next few years. And at that point, EnWave as his parent company will have to choose how to maximize that company's subsidiaries' value for our shareholders.
Of course, definitely. So it might be like a spin out, or you're going to sell it, or you say, no, we keep it because it's such a cash cow.
Exactly. And I think we'll certainly have our options to determine, again, how to maximize value for our shareholders.
Fantastic. Options are always good to have. That's really a good thing. So Munchies looks fantastic. You just described the growth path also. Sometimes I have a little bit of feeling it's more concentrated on, let's say, the US and Canada, especially to Starbucks, of course. Yeah, I remember when that started, like with 200 shops. Now it's, what, 12, 13,000 or something, I think?
Munchies is actually sold in over 25,000 points of distribution.
Okay, even more now.
In the US, but along with Starbucks, we're in Costco, which is one of the premier club channels.
I saw on the table.
Walmart, not so much right now, but Whole Foods and other premier channels. So
there's again, lots of room to grow.
There's a lot of room to grow.
The question is, when can I buy this lovely stuff in Europe?
Probably not soon, to be honest with you. Not under the Munchies brand, but what I hope is that you can buy it from some of our other commercial licensees who have bought machinery from us and will be paying EnWave royalties on the sale of new cheese snacks, maybe branded under the Arla moniker or Friesen Campina.
Okay, as long as it tastes the same, I'm happy.
Perfect.
That's important.
Yeah, great.
Super. Okay, now that we are not going wrong here, you're not only a Munchies company, of course, you do much more with your fantastic technology, which is also fully patented, of course. You are doing cannabis, you are in the meat business, vegetables. I remember Bonduelle, for example, which is super well known here because it's a big French company. And I think there was a little bit of a disappointment in the market because they thought, Bonduelle is now having the exclusive license still, they're going to buy a 400 kilowatt machine, but it did not happen. So what is your take on that? Because I have the feeling investors maybe misunderstood it a bit.
Sure, I think that investors shouldn't place too much emphasis on Bonduelle not choosing to go forward with a large-scale machine on the prescribed timeline, because they are still very active using our REV technology and continue to sell their high-value dehydrated frozen vegetables to consumers in Canada, as well as marketing the product on a B2B basis in the United States. So what is in the future between Bonduelle and EnWave? We will see. They'll continue to build out this opportunity, and when, or if I should say, they reach an inflection point on the capacity for their existing machinery, they'll have to buy more.
So they're still happy customer, of course.
Yeah, they're still driven.
That's important.
They're still driven to make this a successful project. It just didn't happen in the timeline that was in the contract. And from our point, or our standpoint at EnWave, we want to now work with other companies to explore dehydro-frozen vegetables and expand the number of licenses and the amount of machines that we sell.
So the loss of the exclusivity is maybe now an opportunity for you guys.
It is, point blank.
Right?
Yep.
Yeah, fantastic. Let's shortly go to the cannabis market, because we saw the cannabis market huge hype and whoa, a deep fall.
Yeah.
And of course, you suffered a little bit through that because all of a sudden you were associated with the market. Yep. But I would call it, as we say in the mining, you are the shovel provider. So this is not too bad. As long as you get paid, everything is fine, right?
That's exactly it. As long as we get
like
paid.
Like the guys here from Caterpillar.
That's right. I mean, with the announced partnerships that we have, we've been paid pursuant to the contracts that we put out to deliver machinery thus far. And further to that, yes, we were included in 2 ETFs as the pick and shovel angle, and it didn't help us when the cannabis sector had a sell-off recently. Fine. We still view cannabis internationally as a massive opportunity for us to continue selling REV equipment. So we understand that it's entering into a bit of an M&A cycle in Canada. However, internationally, we still see large amounts of capital being funneled into emerging companies. So if I were to place 50% of my resources on cannabis and 50% of my resources into the food sector, I think that would be appropriate moving forward.
Okay, fantastic. Let's come to the technology overall, meaning we know that everything is working. So what is now your capacity machinery-wise? How do you service them? Do they need a lot of service? Because those were some questions we received from our viewers, because they wanted to understand better if there is, let's say, a bit more of a risk inside the company when you deliver machineries, or how do you pre-finance them? How does it work?
So firstly, in terms of manufacturing capacity, this year we chose to invest in an additional 21,000 square foot facility to allow EnWave to produce up to 20 large-scale machines, so 60 to 120 kilowatts in scale.
Yeah.
We did the calculations internally, and if EnWave sells 10 large machines and 10 small machines per year, as a standalone basis, that business unit would be profitable, not including the profitability of NutriDrive.
And the royalty collecting.
Correct. And how we structure our contracts as we're building machines, we take a 40% deposit up front, 20% 3 months after fabrication, and 20% before we actually ship the machinery. And then, so the final margin piece and additional margin we collected prior to shipment will be realized after startup. So we're prudent in our cash collection.
Fantastic.
We don't require significant amounts of working capital to grow our business, and I think we're positioned well to address, I think, the snowball effect that we're starting to see with the commercialization of our technology.
Great. So what does the financial side look of the company? I think you have still no debt, right?
No debt. We have approximately $18 million on the balance sheet currently. So we're fully funded for some of the growth initiatives we plan to pursue. In terms of financial performance, obviously that's been improving on a year-to-year basis. Our financials for the full fiscal year will come out December 10th, and subsequent to that we'll have a news release summarizing those results the next day, and a earnings call 2 days thereafter to provide as much transparency that we can to our shareholder base.
Of course, definitely, as you did always. Yeah, I really appreciate that. Fantastic. So everything looks quite good, and the game plan for next year is sell as many machines as possible.
Well, yeah, that's the plan every day, right? So the plan every day is to sell, sell. Everyone's a salesperson in our organization.
Super, perfect. Hey, then all the best, and really we look forward to get this in Europe soon, hopefully, even if Allah or whoever it does it, I don't care. I want to have it here, because I would be the first buyer.
I'll let you know when.
Super. Perfect. Thank you very much, Brent.
Thanks,
all the best. Thank you. Yeah, ladies and gentlemen, it was Brent Charlton, the CEO of EnWave, and you heard it. The business is going well. Everything is in good shape. Great new brands, as you see here. And yeah, the numbers so far, the first 9 months were fantastic. We will see soon, in approximately 4 or 5 weeks, then the year-end numbers. And I have a good feeling that they are much better even than maybe the market anticipates. This is but my personal feeling, of course. Yeah, nothing what he has said. Yeah, just for the regulators, don't toast me. And no, really, they're doing a great job. They're always transparent. $18 million in the bank. They can, build many, many more machines. They just enlarge the facilities, and this is exactly what we want to see: growth, profitability, no debt, and going forward, and great products. That's exactly how it should be. Thanks for watching us. Check out the company. Bye-bye from Munich.